Welcome, everyone, to the Capstone Conversations. I'm Stephen Jones. I'm Senior Vice President of Oil Market Strategies at Argus, and I want to welcome my colleagues who are joining me for this conversation this afternoon to put a cap on the conference and some of the key highlights that we picked up along the way. I'd like to introduce Jeff Kralowetz, who's Vice President of our Crude Oil Business Development Group, and Vanessa Viola, who is Senior Vice President in charge of our Latin American business and whatnot. And so welcome, Jeff and Vanessa. Thanks for joining me and wrapping up what has been quite an eventful series of virtual sessions to cover what would typically be our in-person crude oil summit. We've covered so many issues, so many different, unique topics, but there have been many themes that are common that seem like major threads that have run throughout the whole program. And, it all started out pretty much with the tone being set by Bernard Looney at BP, talking about the energy transition and industry transformation. And I found it interesting that this topic seemed to reverberate in almost every unique session and even the regional coverage that we seem to expound upon throughout the conference. And, it's hard to also avoid the Biden administration's immediacy of issuing executive orders and how that's weighing on the market as well. Very timely happenstance with the timing of our conference and the inauguration and the initial executive orders. But, that seems to be a very common concern that we see in the crude oil markets, or some of these prompt energy executive orders. And what does that mean in terms of timing, pace around the energy transition and industry transformation? When we kind of think through the fact that most of the time our conferences and kicking off the year from strategy discussions and market developments are typically concerned about the prompt market and what's going on in terms of capacities and throughputs and whatnot. And we'll hit some of those highlights, right? But it seemed like a lot of the long-term issues were dominated over some of the short-term factors. But who could ignore COVID, right? COVID has been one of the most significant events in our lifetimes, and it has just pulled the rug out from underneath demand. And so a lot of our conversations have been dominated by what does the demand recovery look like? And one of the issues that I picked up, and I'll pause here and pass the ball around the room, so to speak, but it was surprising to me generally how optimistic some of our industry executives were and how open they were in our sessions, sharing that, once the vaccines roll out and we start to see some rebound in the economies, that we're likely to see demand come back a bit more aggressive than many of the consensus forecasts have depicted so far. But on the other hand, some economists are still relatively conservative in advising that not all economies are equal. And a lot have been scarred heavily due to COVID and won't bounce back quite as aggressively. And it's hard for demand to be supported if people have lost their jobs, lost their well-being from, the COVID impacts, and that the vaccine rollouts won't necessarily be uniform across the globe. So there's a lot to take on here and a lot for us to unravel in the few minutes that we have to put a cap on all that we picked up through the conference. So kind of pausing there and kind of kicking the ball towards you, Vanessa, on your observations. We've heard about the energy transition almost ad nauseum. It's very important, very critical for us as an industry to understand, how is it accelerating? How will we adopt to these impacts? Perhaps you could kind of give us a flavor for what's going on in Latin America's exposure from the transition standpoint. Is this positioning of Latin American countries and economies and industry acceptant of, or going to be able to keep up with the transition, or how do you position it?
Yes, it's been really interesting, Stephen, when we think about Latin America in the context of the oil industry, the first thing that springs to mind is really the region's national oil companies. So Pemex in Mexico, Petrobras in Brazil, Ecopetrol in Colombia, Petroecuador in Ecuador, Petroperu in Peru, INAP in Chile, PDVSA in Venezuela, YPF in Argentina. And all of these NOCs, when you think about them, of all of these companies, Ecopetrol in Colombia is the one that is really leading the way in terms of the energy transition. As we saw earlier today during their presentation, most of the other regional NOCs continue to focus a lot or even entirely on fossil fuels. So while we see major oil companies such as BP, Shell, Total, etc., striving to rebrand themselves and be known as energy groups, venturing into wind, solar, hydrogen, etc., for most of Latin America's NOCs, it has actually been business as usual. A lot of that approach has obviously to do with the domestic, political, and economic factors. But having said that, let's not forget that Brazil, for instance, has one of the world's largest energy mixes, with renewables generating more than 80% of electricity. And that percentage will not necessarily go down because Petrobras has decided to divest its renewables assets to focus on crude oil. I think that perhaps the main question here is how the decision by most of Latin America's NOCs not to embrace the energy transition might impact partnerships with and investments from the private sector. The transition to cleaner energy is prompting companies to be more selective about where they allocate capital and investment. And that is going to go to the best countries and to the best projects. So in a world that is moving towards renewables, expensive oil and gas has no room. And Latin America's NOCs will need to be mindful of that, Stephen.
Do you think that the funding issues will be a constraint or competition between those that need the funding from external sources versus internal national funding for continuing the production, supply, and dependency on petroleum during the transition will become problematic?
It could be. Because, like I said, I think the way the world is going, the direction it's heading to, investors are going to be extremely selective. So you really need to keep that in mind.
Yeah,
I'm sorry, Jeff.
I would just interject one thing that came out of our panels, and that was that really this is a geographical thing where the European-based majors seem much more drawn to a faster transition than even the United States-based majors. And Vanessa's just told you about all the Latin American NOCs. One of and that has to do with constituencies in each of those places. But one of the warnings that we got in the panel was, boy, if people hated negative crude prices on the 20th of April, wait until they become renewables companies operating largely as utilities, where you have, when there's no demand for wind power, the price goes negative. So anyway, that was an interesting thing that came out of our discussion.
Yeah. There's all kinds of scenarios that can come from, extremes as things progress, right? Yeah. Everyone's got to explore the boundary layers. And I guess what really stands out in many of the discussions I was a participant on and helped facilitate with the sessions is, how important relationships are. And in Latin America in particular, relationships between business partners and, working on face-to-face developments and making progress in that regard, it's very important, right? So, Vanessa, when we kind of think through the Biden administration turnover and where things are going with the political posturing, how might we think about, or what was the tone of things that you picked up on with the changeover of the U.S. president's administration?
Yeah, so that's another key topic. So I think, when it comes down to Latin America, some things will not change. Latin America will not become a priority under Biden, at least not in the short term. And right now, his focus is obviously on handling a public health and economic emergency at home. And I think when the time comes for him to look overseas, he will most likely have other priorities at the top of his agenda, such as Iran, Russia, and China. Venezuela will probably come up at some point, but as Helima Croft with RBS Capital Markets mentioned during this conference, we are now looking at any speedy reset in relation to Venezuela that would really allow crude to flow again. The situation in Venezuela is so dire that even if economic sanctions were to be lifted by the Biden team, you'd take a huge amount of effort and time to see their economy and oil sector recovering. Now, when we look elsewhere in Latin America, the presidents of Mexico, Colombia, and Brazil all face an awkward start with Biden because they had put pretty much all their eggs in Trump's basket. So, they kind of delayed recognizing that Biden had defeated Trump. But I think the main area of friction between Biden and Latin America, Stephen, will most likely be around energy and environmental policies. And Mexico and Brazil, the largest economies in the region, they have the most at stake. In Mexico, the administration has been focusing pretty much most of their vision on boosting fossil fuels. And Biden's push would be to really reorient energy policy towards greener and more financially sustainable terms. And in Brazil, President Bolsonaro will face pressure to tackle the Amazon deforestation. But then, Biden's broader environmental policy plans could also bring larger cooperation on renewables energy, of which Brazil is a leader, as I just mentioned. And then, you have Chile, Peru, and Ecuador. They will all go through presidential elections this year. So whoever takes over in those countries will have a chance of a fresh start with Biden. But going back to my initial point, Latin American countries that remain glued to oil will probably be under more pressure to find ways to diversify away from fossil fuels under Biden's administration.
Yeah, I guess on that point, Vanessa, it's an excellent point. The pressure to diversify, how to work on geopolitical relationships. Do you think the Latin American production will compete effectively with the changes that we see in global trade and, say the larger Middle East producers, and for that matter, as U.S. crude begins to rebound eventually? Do you see much change, or did we pick up much in the conversations around the conference on concerns around exports beyond conventional trade partners?
So that has been one of the key topics discussed about Latin America during the conference as well. So yes, we've seen over the course of this conference that all roads lead to Asia, particularly to China, when it comes to crude consumption. What we've heard from Petrobras and Ecopetrol earlier today is that China continues to soak up a big chunk of their exports. In 2020, China was the destination of more than half of their crude exports. Having said that, what I thought was interesting was when Chinese demand went down in the peak of the pandemic there, both Petrobras and Ecopetrol had to find alternative outlets for their crude. And this kind of prompted them to really venture into new markets. And what is interesting is that despite the pandemic, Petrobras has actually recorded record production levels. And when we look at their medium sweet crude 2P, which is their main export stream, 2P exports to China have pretty much doubled versus last year, and is currently the main grade imported by Shandong refineries, which is very interesting. So they basically have been taking market share from other grades, such as Oman, Jeno, Espo. And Ecopetrol has been successful in placing their crude, not only in China, but also into South Korea and India. So yes, Latin American grades have been doing quite well in the international arena, especially in Asia. And in some cases, they have actually displaced some of the more traditional, let's say, well-established grades.
That's an interesting point, and I guess it kind of brings us back full circle to kind of the U.S. production outlook. As U.S. crude production fell off in and China began to resume imports, and it accommodated some of these trade options, right, that you just speak of, Vanessa. But, from a U.S. production standpoint, Jeff, how would you characterize the producer's sentiment and key issues that you picked up in the sessions you moderated and what we heard around the virtual room, so to speak? I mean, is U.S. crude going to come bouncing back? How do we kind of posture the issue around production outlook and infrastructure right now?
Well, I mean, what I picked up was a lot of guarded optimism. The fact that WTI is over 50 kind of gives people a little oxygen. But I think there's almost universal agreement that we're not going to see the old days of adding 1 million barrels a day or 1.5 million barrels a day per year to shale output. I mean, we're down about 2 million barrels a day from the beginning of 2020. And there's a lot of talk that, the rig counts are slowly inching up, and we are getting to the point where we could maybe add, starting the end of this year, we could start adding maybe 100, 200, 300,000 barrels a day to shale if conditions continue to be strong. But the word that you hear, or the phrase you hear, is value over volume. And when these guys get their cash flow, they're looking to strengthen their balance sheet first. They're looking to pay their dividends second, or maybe you could reverse the order of those two. But spending of cash flow on new drilling is really not getting above 65, 70% of cash flow anytime soon. And even if you got to like $60 a barrel, people are not, and no one is talking about getting back to the old days of spending 120% of cash flow on drilling.
So guarded optimism, huh?
I think.
So, yeah. No, I mean, I think that's a excellent characterization of the way I picked up the market sentiment right now at this point in the year, on the heels of the massive reductions and uncertainties around demand support for a recovery, let alone the funding aspects. If we think about the pricing level, the economists were talking about there being potential for some major upside in price support in the back end of this year. And yet a lot of the U.S. producers, as you so aptly characterized it, guarded optimism, we aren't likely to see volume in place of what now has been the swing pendulum towards value. Did you get a sense of feel, or did anyone offer up kind of what those price tiers of crude price levels might look like that would stimulate volumetric increases? At some point, I think it was Teague that said, or maybe he was characterizing Brent Seacrest's mention about
fear and greed.
Exactly. I mean, let's face it. Independent producers historically have, spoken to discipline, but when the money hits, the table, all bets are off, huh?
Yeah.
I mean, how do we keep that in perspective versus making light of the facts?
We had one, I thought, real credible estimate that if you stay over $50 a barrel for WTI, you could expect the United States to add 1 million barrels a day to shale output by 2025. So, roughly 250,000 barrels a day per year between now and then. And then if you got over 60 for any kind of long-term or sustained time frame, you could add 2 million barrels a day to output by 2025. But keep in mind that we're down 2 million barrels a day from the beginning of 2020. So we're saying you get price above 60, you just get back to your starting point by 2025.
Yeah. No, aptly put once again. I mean, even though there is hopeful optimism around potential improved conditions, it's not going to go back to the heyday of volume ramping aggressively, right? Even with very strong price signals. There's going to be exerted discipline, it sounds like.
I guess the other thing that we heard that's really interesting to keep in mind is it's not going to be an even rise across the shale sector. The Permian
Right.
has so many advantages in terms of geology, proximity to the market, that you're going to see the Permian rise faster than, say, some of the further flung areas like the Rockies.
Yeah, one thing on the price, supply curve that stands out. Everyone's contemplating about the discipline of supply and what's U.S. production going to look like, which is all at the core of the topics and discussions that we've had. But OPEC and the Saudi situation was pretty much just accepted that the discipline will be there, that we're going month by month to manage inventories. But one thing that I picked up on is that a lot of market analysts and economists and whatnot have expressed concerns about the accuracy and the representation of inventories in the prompt market, that perhaps stocks weren't as high as inferred because a lot of them aren't direct measurements, they're by difference, and that perhaps we didn't have as high a problem or draw as and correct as quick. So there may be some upside there, but people are losing a bit of sense of confidence in some of the legacy, long-standing data sources. And one of those aspects, plays into the U.S. production, right? The U.S. statistics on volume of output and where are we really at this point. So that's something for all of us to watch, right? Not to overemphasize the point, but we've been outside of historical correlatable ranges of data. And so some of, the more prompt indications of real-time data help corroborate maybe exactly where we might be on the balances fundamentally. But OPEC seems to be less and less of a concern in the recovery at this point because, the Saudis and OPEC plus members have kept the consensus together, if you will, the consortium. I guess thinking about the U.S. production and the Canadian situation, if U.S. production might be more disciplined, and yet here we sit, as you've shared with me, that Canadian production's already bounced back, right? What's driven the early bounce back versus what might be ahead still? What are we picking up from our Canadian industry participants in that regard?
Yeah, I think there's a couple things at play there. One of the facts is political, and that is that the government of Alberta at the end of last year lifted what they called curtailment, which was a regulatory cap on production. So that has been lifted. The other thing is you had a lot of deferred expansions of the oil sands, both what they call SAGD, which is from wells, and the mining that had not been developed over the course of the 2 years that this curtailment was in place. So you had a little bit of pent up production capacity. And of course, now that you have prices above $50, that is a lot of that. I'll put it this way. Most of Canadian production works at or below $40 a barrel. And so they were ready to bring that back online. And so while the United States is still 2 million barrels a day below the beginning of 2020, Canada is absolutely even with their output level of 2020. And the expectation is it'll continue to grow, even with the recent news about Keystone XL being suspended. So, that was a major hit to your ability to market Canadian barrels. But there are all kinds of plans for incremental expansions to existing lines and crude by rail.
Yeah, I guess speaking of pipelines and crude by rail, if we go back to this bigger topic of the energy transition and the Biden administration with executive orders and all the pressure, and for that matter, the common theme about relationships, like we were talking about with Latin American counterparties and whatnot. How do we put in context the carbon balances and the ESG pressures of what people deem heavy Canadian crude relative to light, sweet U.S. crude production? Was there anything that stood out in discussions these past few days, or is it just an ongoing extended debate that we have to continue to clarify?
Well, I mean, so the conventional wisdom lamented by all the Canadian producers is that their crude is heavy, high sulfur, and creates more emissions as it's especially the oil sands barrel that's mined. But that has changed a lot, and I am forgetting the exact amount of greenhouse gas emissions reductions per barrel in Canada right now. But one of the big producers, I mean, Cenovus, made the case that the Canadian barrel actually could arrive in California with a lower GHG profile, lower emissions profile than the barrels that are produced in California and run through California refineries every day. So they were making the case that California should really embrace the Canadian barrel because it's environmentally less emitting than some of the others.
Interesting. Yeah. And that, I think, will be an ongoing debate for some time, right? And everyone needs to bring their facts to the table and find a way for them to be properly vetted and accepted, as opposed to selective fact checking, right? So industry's faced with a lot of these challenges, and it's interesting to me how significant these long-term exposures are in the face of the short-term recovery that is still as large an uncertainty as we faced before, right? COVID recovery and whatnot. I guess if we kind of put a bow on things, or there for either you, Vanessa or Jeff, what, if I may just ask, what jumps top of mind that was most impressionable to you through these last few days? To me, it's simply the fact that we are so preoccupied as an industry around these long-term issues now and having to get underway with the transformation. Are there other aspects that stand out, or would you tend to agree that to me that was most surprising? I thought everything would be COVID and economy and price and output and the administration, which, don't get me wrong, that was a heavy emphasis, but I'm still intrigued by these 10, 20-year targeted outcomes and people starting to grapple with what those pathways might look like in a crude summit, if you will. What jumps out to you guys? Is that a fair synopsis, or something else come to mind?
Yeah, so for me, regarding Latin America, I was very impressed with the level of optimism that I saw coming from the industry. And again, an industry that is pretty much still focused heavily on crude oil at a time when we're talking about the energy transition. So it was interesting. It was interesting for me to see, how cautiously optimistic they are. But when we talk about the second half of the year and next year, there's a huge amount of optimism. And again, in a sector that is heavily dominated, very focused on oil, with Ecopetrol in Colombia being really the outlier over there. And at a time when they do speak a lot about the uncertainties revolving local demand. So they're really betting all their bets on the international market, and really thinking that they will be able to place those barrels overseas, because they have been succeeding in doing that with Asia. So a lot of uncertainty at home is still in terms of demand bouncing back and when that's going to happen, but a lot of optimism in terms of being able to really place these barrels overseas, especially in Asia, and again, displacing traditional suppliers over there.
Excellent. Yeah.
I think
Jeff,
one of my enduring impressions is, again, going back to Jim Teague on the first day, CEO of Enterprise, and he just makes the case that, look, a lot of economies around the world are growing, populations are growing, people want to get out of poverty, and that requires some efficient energy. And we are going to need, for decades to come, a mix of energy sources, and oil is probably going to be a major component of that. So, yeah, I think, again, guarded optimism about the future of the business by these crude oil producers that we talked to this week.
Well put. I appreciate you guys participating in our wrap-up session here for the summit for the Crude Live event. I think, Vanessa, you nailed it. The optimism, and Jeff, as you characterize it, the guarded optimism is certainly starting to take shape. I tend to, carry that away from this event as well. But I'm still heavily impressed by the fact that the number of uncertainties are still shaking out at this point in time. But that optimism has to be there. And I tend to think the ingredients for the market development, be it being well underway with the energy transition and what that means for industry transformation. If any industry in the very diverse economies can tackle these kind of problems, it's certainly our oil and gas industry and the crude oil sector in particular. So I think we ought to park it there. I want to thank all of our delegates for participating throughout these last few days. There's still a few Asian broadcasts still available tomorrow. And we look forward to your feedback and continuing the dialogue. As we've noted here among the three of us, relationships are very important in our industry. And Argus, we as colleagues appreciate our relationship with you and look forward to being of assistance and exploring these issues further with you over the months and year to come. And we all wish you good health and a prosperous year ahead in 2021 during the recovery. So thank you all, and thank you, Vanessa and Jeff, and I look forward to seeing you again soon.
Thank you for having me.
Thanks, Stephen.
You bet.